Welcome to Striking Options, the show that reveals the options you have to better navigate markets. I'm Jeff Kilburn. We've adjusted our show until we get back into the studio. I'm joined today by Bob Icino. Welcome, Bob.
Thanks for having me, Jeff.
Well, it's an exciting week. Equity markets have persisted to grind higher, and this week we'll hear from several Fed speakers. What else has your attention this week, Bob?
Well, other than the Fed speakers, oddly enough, I'm looking quite a bit at Europe, simply because the market perception is that Europe isn't necessarily doing enough like some of the other countries were, or are rather. And we've got ZEW economic sentiment from Germany, which is the engine of the EU. We've got some UK numbers. We've got GDP. So we've got some pretty interesting stuff coming out in the EU, and I want to see how that affects the dollar mostly.
That is interesting. We actually saw a note come out from BlackRock today focusing on Europe. So I think you're spot on to put your eyes over on Europe. But let's discuss two topics today, if that's okay, Bob. I want to look at crude oil and the red hot NASDAQ 100.
Absolutely.
All right, let's talk about crude oil. It seemingly has found a home at $40. So my question to you, Bob, is this the new range in crude?
So I want to be very specific about this because crude oil from a fundamental standpoint is building a base fundamentally. And we always talk about the technical basis, but the fundamental base is being built in refinery utilization as it continues to creep back above 70 and tick slightly higher each day, regardless of whether there's builds or draws. So that's a long answer to your question where, yes, I do believe it's building a new range, and the low of that range is likely to be in that $38 area.
Okay, no, great points. And I guess the last question I have on crude oil is, the U.S. dollar, the weakness, I should say, in the U.S. dollar, how big of a factor is that in the price recovery of crude oil?
I would say it's a tailwind, not necessarily a driver. It's certainly good to have a cheaper dollar when you're trying to buy crude oil globally, and that's what's trying to happen as economies recover.
All right, great stuff. Let's shift gears for a moment. Go into the red hot NASDAQ. It's amazing. The NASDAQ had another record close on Monday, July 6th. That was its 24th record close of the year, Bob. And we saw FANG and chip stocks driving that move higher. It's so interesting to see Amazon rose about 6% on Monday, July 6th, above and vaulting 3,000 for the first time ahead of the quarterly earnings season, which starts in earnest next week. So the question, Bob, is does tech ever stop?
You know, when I look at this again fundamentally, it seems to me that out of the four scenarios we could have that involve a growing economy, shrinking economy, increased number of cases of the virus, decreased number of the cases of the virus, in three of those four, the NASDAQ goes higher. It's become a flight to safety trade. So as long as that persists, yes, I have a technical target close to 11,000 now.
The new normal, the safe haven being the NASDAQ 100. Last question quickly, Bob. Does this concentrated rally focused on tech, does that bother you at all, the breadth of this rally?
Well, it reminds me of the 2000s, but I think it's different now. As we shift to work from home, I think tech again becomes a staple, similar to the way industrials and manufacturing used to be.
All right, Bob. Well, thanks as always. We want to thank you for tuning in to Striking Options. Please tune in every week as we will continue to strike options.